Hi everyone, welcome back to One Finance, and in this video we're going to cover Lumen Technologies, fundamental and technical analysis. So the usual, our quick disclaimer, and then for our discussion points we have fundamental, technical, we have short market update, outlook, and strategies, and lastly we have the trading results for the last 7 days. Now for the fundamental, so here we're looking at the balance sheet and the income statement. So for the balance sheet, total revenue, net income, you see here that the net income is actually not so good since 2019, or actually before the pandemic. And then for the total assets and liabilities, you can see here an almost like a decreasing trend. But these figures are just the front of the analysis, but I'm more curious about the ratios because it's actually um, ignoring the numbers in terms of the size of their balance sheet or income statement. So here we focus on the ratios. Now for the 5-year average sales revenue growth, that's negative 0.2. So negative, that's not acceptable. But if you're going to look at here, that's almost flat. Now for the 5-year net profit margin, the average is negative 7.1. So again, that's not acceptable because it's negative, and now it's actually below um, negative 1. Now for the debt equity ratio, that's 1.96. That is pretty high. It's almost 2.0, so meaning every one, let's say €1 or $1 equity, there's about $2 or €2 in debt assigned to that equity. So the company is highly leveraged. Now for the 5-year PE ratio, the high is actually 6.5 or 6.6, and the low of 2.4 or 2.5. And if we're going to look at the current PE ratio of the company, it's 2.5, so it's lying almost at the 5-year low. So the ROE is negative 13.90 or negative 14. That's really extreme negative, because if you're going to look at it, you're actually paying for nothing in terms of earnings here. That's negative 13 return for the equity. So the fundamentals are not so good, but let's try to look at the competition. So we have here at&t, Verizon, Telefonica, and Orange. So for the book value of Lumen, that's 10.42. Computed fair market value of Mabuhay Fund using the two financial metrics, that's actually an average of 25. So that's at least 50% upside from the book value per share. But if you're going to look at the current ratio here, that is pretty much undervalued. Okay, from let's say 4 current price, and then the fair value is at 25. So at least 50%, 80% upside there. Now the PE ratio is at 2.5. For at&t, we have the rest here of their valuation. For at&t, that's 40 versus the current price of 19. So at least 40-50% upside from the current level. PE ratio of 7.8. For Verizon, that's 80, and versus the current price of 40. Again, that's at least 40-50% upside. PE ratio of at least 8. And then Telefonica, that's 10, the current price of 7.4. So at least we have there 20% upside from the current level, and then a PE ratio of 11.6. And for Orange, that's 25, current price of 10.38, at least 50% upside again, PE ratio at 6.37. Now, if you're going to look at the PE ratio here, Lumen and Orange are the two companies with pretty cheap PE ratio compared to the competition, 2.5 and 6.37 respectively. Now, Mabuhay Fund actually holds Lumen and Orange currently in the portfolio. So now we jump to the technicals of Lumen and see if um, the position is justified. So here you're looking at daily. Just to give you a quick uh, backtrap about the technicals, the pre-COVID is around 15 at this level here, while the COVID bottom is actually at 8. So the current level now is below the COVID bottom. And if you can see here, we have the first significant gap down. That's from 12.5, and then it actually went dropping at this point, maybe 11. But from February, that gap was actually bridged sometime in June. Now, here's another significant gap down. That's from 7.5. It dropped to around 6. And that gap down, okay, that gap from last year, October or November, has never been breached yet. And then we saw again another drop here from 5 down to 3.5. And that's actually serving as the resistance now. So we might see that the price would retest this gap here at a key resistance of 5. Now, as to the RSI and other indicators, it's currently hovering near oversold. It's 28. The MACD is actually a bit of a downside bias here, but because of the RSI getting oversold, we might see here an upward bias pretty much soon. If you're going to look at here, the volume is also not so good for the daily chart. Now, for the weekly, okay, we we can actually see here that that volume there, the downtrend, okay, is not supported by the volume, because if you're going to look, there's actually a spike in volume and the opposite of the direction of the price. So that should not be, because if you're going to look at a very strong downtrend, it should be supported by a lower volume as well. So that's why we may expect that the price should go up again. Okay, and I'm saying that it would bridge the gap at 5, but there's a potential upside of this company uh, given the technicals. So for the RSI weekly, it's actually trading along oversold levels, and for the MACD, that's still showing down, sideways and downward bias, negative 1.2 here. So for the market update and news, what's moving the stock now? The main reason why we saw the gap down from 5 to 3.5 was this one. They have their um, fiscal year earnings report. The top line was actually not good. It's actually lower, I think, for year-on-year comparison. But um, again, we were considering the record of the company, the fundamentals, and the technicals as well, and we believe that this is just um, temporary drag for the company. And we also have this news that Lumen wins a 223 million defense info system agency contract. And again, another downside for the company here, we have some market analysts in Wall Street downgrading the status of the company from buy to hold, and then from hold to sell. Okay, so for our outlook and strategies for the company, we have target long entry at sub 10. So that's far from the level now. So again, this is a non-core position of the fund. That's why we're building our entries very defensively. And then we aim to cost average in identified key levels from sub 7 per share. And then we really wanted to keep an eye on the upcoming earnings report of the company. And the target price is near 7s. Actually, that's 5 and 7. um, euros per share, or yeah, that's actually the identified gaps early this year and last year. And for our trading results for the last 7 days, we have here, we saw some retracements for GSK as well as VAR1 and ZIM. So that's why we actually sold all the positions. And with this capitalist gains here, as well as the HelloFresh and ASX. So all of them are green as usual. And we hope that we can flip more gains in the coming weeks to improve the yield of the portfolio. So that's it. Thank you very much for tuning in again. If you like the video, kindly hit the like button, share, and subscribe to our YouTube channel. And remember to always follow us in eToro for more updates. Thank you.